Hello, welcome to the third lecture on stage analysis full course. In this module, we will deep dive into technical indicators, which are very important and kind of fundamentals and foundational to the stage analysis. So these tools will help you identify the stages and the confirm whether the stock or the market is really in the given stage or not. So let's start. So the first indicator which we will be using is moving average. So what is the use of moving average? So it is basically used to smooth out the noise from the market. So it will help you to identify the trend over a specific period of time. So in the stage analysis, Stan Weinstein recommended 30 week moving average, which is for the long term investing. You can also go for the daily time frame on and use 30-week moving average. So this is basically used for confirming the market stage. So how do we know the stages based on the moving average? So if the stock is in the stage 1, then what are the usually conditions? So the moving average will be the flat and it will indicate no trend. So let's say this is stage 1. So the stage 1 usually occurs after a sustained downtrend. So this is the moving average, and then the moving average will be like a flat. So this is the flat moving average. Or if there is a uptrend which has happened and then there is a moving average which is flattening, so this can also be turned as a base one, and then there is a breakout, and from here also we can have a breakout. So and the price usually oscillates around the moving average, so price will just come back and forth on the moving average. So this can be a good indication for identification of stage 1. So now let's see the stage 2. So when there is a breakout, so obviously the moving average will be sloping upward and the prices are consistently above these moving averages. Okay, and whenever the price comes back to or the pulls back to the moving average, it's a very good support. So that is stage 2. So this is how we are going to use the moving average in stage identification. Then what happens in the stage 3? So in stage 3, this is the topping stage. So usually moving average flattens and occasionally even price comes up and down above this moving average. What is the case in stage 4? So this is the declining phase. Usually the prices are below this moving average. Okay, so price consistently stays below the moving average and act as a resistance when in the pullback. So this is the pullback. So whenever price pulls back to the moving average, it takes resistance. So this is how we will use 30-week moving average. You can use simple moving average, or you can even use exponential moving average. So if you want faster response, go for the EMA. You can also combine 10-week or 20-week moving averages for the additional confirmation. So let's set up moving average. So this is the TradingView blank uh, screen. So let me put an EMA on this. So this is moving average exponential. So let me put two moving averages. So the one we will put is 30, and let's make it red, and let's make it little bigger, and let's make the other EMA as 10 EMA, and let's make this as cross or dots. Okay, that's it. So as you can see, this stock SW Solar is in the downtrend. Exide Industry downtrend and taking support, and it is taking resistance from this stage. So now let's go back to the slides. So the next indicator which we will use for this stage analysis is volume. So we will have to do the volume analysis. So why we use volume? So it actually reflects the enthusiasm or fear of an investor. So whenever there is a buying, whether the volume on buying is heavy or low, or if there is a selling, then whether the volume is low or high on the selling. So let's go through the 4 stages and see how the volume behaves. So in stage 1, accumulation stage, volume is generally low. So obviously the stage 1 is like this. See here, the volume is obviously to be accepted like as a low, because there is no interest in the stock. It's a minimal interest in the stock, so the volume usually is low. Occasionally it might spikes up whenever there is a accumulation on the positive days. Then what happens in the stage 2? This is this rising stage. So volume has to increase significantly during the breakouts and rallies. So whenever there is a new breakout happening, there has to be increase in the volumes on the breakouts. So this is the breakout, this is the breakout. So volume has to be increased significantly on breakouts. Pullbacks, whenever there is a pullback like this, during pullback here and here, there is a low volume, so which indicates low or weak selling pressure. And whenever there is a breakout, it has to be a high signal, high volume on the breakouts. Okay, so that is what happens in the stage 2. Now let's go through the stage 3. So what is stage 3? It is the topping phase. So on the stage 3, volume spikes on the down days. So whenever there is a pullback, there is a increase in the volume, okay, which indicates that there is a distribution by the institution. Somebody is selling very heavily, okay, but the price is being controlled. It is not falling below this line, and it is not going above this line, which is a support and resistance. So overall volume may increase as volatility rises. So as there is a volatility, volume may increase. How to identify? You have to put 2 lines, support and resistance, and the price has already risen, and then on the top this is the case. Now let's go through the stage 4. So in stage 4, obviously it's a downtrend. So what happens? Whenever there is a downfall, there is sharp increase in the volume. Volume surges during sharp declines. And whenever there is a pullback to the moving average or the positive candles, then the volume is low. Okay, so this is the overall analysis of volume in the all the stages. So hope you have understood. Now let's go for the implementation. So look for the rising prices with declining volume. So the price is rising and volume is declining, so that can possibly show a weakness. If the volume is rising and price is also rising, then this is confirming. Okay, so which are the indicators which we can use? So there is indicator called as OBV, on balance volume, which actually tracks cumulative buying and selling pressure. So if the buying pressure is high, the OBV will rise, and if the buying pressure starts decreasing, then it will go down. So this is a good indicator to identify the volumes. There is one more indicator, trading lines enhanced volume indicator. This also indicates using different colors the positive and negative volume. So let's put these indicators on the chart. So let us put OPV. So let us choose this one. So as you see, the volume is increasing along with the price, and whenever there is a down trend, the volume is stagnant. Now you see here, whenever this stock crossed this moving average below, OBV also started declining. Okay, so you can also look for these different settings and customize as per your need. Let's put another indicator, trading lines enhanced volume. So now if you see here, there is a breakout, and on the breakouts there is increase in the volume. Whenever there is a pullback, there is a low volume. Again, whenever there is a breakout, there is a low volume. Whenever there is a sell off or a topping phase, you have a huge volume, which is the negative volume. Okay, and now if you see, it's in the range, so the volume is also less. It's below the last moving average, below its last 20-50 moving average. So I hope you have understood. Now let's go through the next indicator, which is nothing but relative strength. So relative strength is basically used to compare the performance of script or stock with the benchmark index. So this is also a key component in the stage analysis in order to identify leading or lagging stocks. So we need to ride a trend of a stock which is leading and the most powerful and the most rewarding stock we have to be in. So this indicator will help us to use give the rating which will tell us which stock is outperforming the market. So let us see how to interpret this RS. So in stage 1, RS starts improving after prolonged period of underperformance. So let's say this is an RS. So this is falling, and then now it has started improving. So this is not a moving average, this is a relative strength. In the advancing phase, what happens? In the advancing phase, this RS starts performing significantly like this. If this is the zero line, then it starts outperforming the overall market. That happens in the second stage. Stage 3, RS flattens like moving average and indicates weak momentum. So on the top it will weak and then gradually it will start falling. And finally in the stage 4 it will start underperforming. Okay, so let us put this indicator on the chart. So for this we have oh, so this is the indicator which we will use, trading lines relative strength line. So now if you see here, let me put this indicator on a, let me just hide these. Now you see here, this is the moving average, but let me just change the setting. So here by default it is comparing with S&P 500. So let us put it to Nifty, and then now it will give you a signal where, let me put it in a new pane. Oh, 1 minute, we have to put it in a new pane, otherwise it will create a problem. New pane below. Yes, so this is the indicator. Now you see, these are the places where it starts outperforming the market, and then whenever there is a pullback it comes to the moving average and then it starts outperforming here again. Okay, so let us see some other stock, JK Paper. Now you see JK Paper was outperforming the market in this period. Then on the topping phase it is also flattening here, and then whenever it goes down it is underperforming. Okay, we can also use Mansfield relative strength. So let me change this to Nifty 50 and change the style little bit. Yes, so here also this indicates if the Mansfield RS is above this line it is outperforming. See here, whenever it is in the range the Mansfield RS is decreasing. Okay, and then from here this point it starts underperforming. So let us remove this. Yes, let us see other stock. See, this stock has been underperforming from here. Only for this much period of time this stock has outperformed the market. Rest all time it has been kind of not outperforming. So you can combine moving average, Mansfield RS, volume, the slope of moving average together to identify the trend as well as stage. So let's go back to the next indicator, or this is not an indicator, this is trend and trend line and support resistance lines. So how do we use these trend lines? So they help us to identify support levels, support and resistance levels. Okay, and they help us to identify and confirm again stage. So how do we use it? So in accumulation stage, what happens? Support from the bottom of base and resistance levels. So let's see, this is the stock price falling and this is consolidating in stage 1. So you will have to draw two trend lines like this, which acts as a support line and resistance line. So these two lines will help you to identify whether we are indeed in the stage 1 or not. What happens in the stage 2? We draw trend lines. So this is stage 2. So we usually draw trend lines connecting lower lows or higher highs. So usually this kind of channels are formed in the uptrend. Stage 3, obviously like same like this situation we get on the top. So assume these are the support and resistance lines. And on the decline phase, what happens? You can draw lower highs, which will make a trend line, and it will indicate the downtrend. So we have a very important role of trend lines and support and resistance lines in identifying the stage analysis. So let us do here. So you can see here in the stage 1 of this stock, we have lines here. So let me just make it a little darker. So these two lines indicate base 1. Here kind of we have this resistance line and support line again. Let's say this stock. Again we can have some kind of support and resistance here, and then there is a breakout from this entire huge base. Okay, so let's go ahead. So you can always combine the trend lines with volume and confirm the validity. Combine these horizontal levels for support and resistance. Can we use additional indicators? Yes, you can use additional indicators. So which are the additional indicators which you can use? You can use MACD. So this will confirm the momentum shifts in the stages. So let me put MACD also. So this is MACD. So now whenever we have change in the trend, there is stock outperforming, volume is good on the breakout, we can confirm from here that MACD crossover is also happening. Okay, so this will give you an additional confirmation about the stage change. Can we use RSI? Yes, we can use also RSI. So let me put RSI. So these are the two bottoms we can see here, and once the change in the stage, we have change and the RSI is trending upward. Okay, and whenever there is extreme top, like the RSI is above 80, it starts showing that there might be a peak, then it comes down. On the top again we have here RSI above kind of 80. So this is how you can use additional indicators to confirm. You can also use ADX. So this ADX will indicate whether we are really in the uptrend or what is the strength of the uptrend. So let us see. So the ADX right now is 11 or 12 around. 1 minute, let me just change this. So the ADX is 12, so it's a poor trend, it's a downtrend which is poor. Let's see the indigo trend. So again the ADX is 17 and it is a downtrend. So if the ADX value is above 20, then it is a strong trend, otherwise it's a weak trend. So you can use this ADX, MACD, RSI indicators to again confirm the trends and decide whether you want to take in the trade or not. So now in the next session we will go through some of the examples where we will plot these things and analyze volume spikes, analyze relative strength, and identify the stages using trend lines and support lines. So that's it. Thank you for this video. Thank you so much. If you have any comments, let me know in the chat section.